I think you should go steady as you go, that basically it's a good environment for stocks, and you need to be sure you've got the right amount in bonds as well, because there's probably more volatility ahead as everyone pays attention to all of these worries short term. But longer term, it's the stronger earnings and stronger economic growth that are likely to keep driving stocks higher. That's good news for investors.
Peter, how do you explain the market's relative calmness in a world where there are tensions and where the president's chief trade guy Navarro says there's a special place in hell for anyone who criticizes President Donald J. Trump on trade?
That was quite a strong piece of language he used yesterday. Yes, I agree. You know, at the risk of flattering our industry, I do think that we are lovers of facts and analysis, right? And maybe what we've decided is that right now, there's just not any facts you can use to put into your black box of analysis and crank it and come out with a sense of how all the G7 dynamics, the trade tariffs, how can you quantify that impact on our markets? And I'm in the camp of you cannot do that right now. There's so many moving parts. There's tons of history. You can tell all the past discussions of former presidents talking about this and the attempts they've made, et cetera. But in the end, Trump has really rewritten this playbook. And we are seeing this playing out in live dynamics right now. And so you do have to have the ability to have some discipline to say, look, I'm going to watch these details, but in terms of translating them into opportunities to use to gain insight into stocks, I think you can't do that right now.
I don't understand that, because we are actually seeing real tariffs, which are taxes, coming at us from many of our top trading partners where a lot of goods flow back and forth, making those exports more expensive, making it costlier for U.S. companies. Already, that creates uncertainty in business, and that also creates a hit to earnings. So I'm not sure why you can't quantify that in terms of the economic growth and S&P earnings, and if that's really why the market's not reacting to this.
Well, you know, you can attempt to quantify that, but I would say right now, to use a baseball analogy, we're maybe in the third or fourth inning of all that data, and until it reaches equilibrium, I actually think it's somewhat of a fool's errand to do that right now, because we don't know how all the other countries are going to respond. When they do respond and we get some kind of equilibrium, then I think it's worth
I totally get that. At the same time, to Sarah's point, Kate, you know, if you have an estimate, let's say on S&P 500 earnings for the year, and they're at X, and you want to say, you know what, we can only base it on fundamentals, but there are all these other factors out there that Peter had outlined. All those factors out there are risks to the downside. So it seems like it would be safer to assume that there's more downside than upside to those S&P earnings, and that therefore valuation should come down.
Well, you could assume that, but I think there are also some things that are risks to the upside, where you've got right now expectations of pretty slow global growth. And if we don't see as much retaliation as everybody is expecting, remember that many of these tariffs have been announced, only some have been implemented. And if we don't see more implemented, you could actually get upside to global growth. You could also see a reversal of the recent dollar strength, which would help U.S. company earnings. And that might also be good for U.S. global growth. So I think you're being a little pessimistic in saying we only have downside to S&P 500 earnings. Remember, everybody going into first quarter had pretty low expectations despite the tax cuts and despite lots of signs of strength. And earnings came in at 26%. That was well above expectations. And that's another example of upside that might be there. Right. Now, I don't want to say there's no downside. I just think that there's not any big reason to be pessimistic right now in a world where I think the risks are pretty balanced, and more of them are on the upside than downside in terms of helping stocks move higher over time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.